Hello, welcome to This Week in the Index. I'm your host, Grayson Brulte. This Week in the Index was designed to highlight the Road to Autonomy Index. The Road to Autonomy Index, comprised of 38 publicly traded companies, is a high-definition lens into the emerging world of autonomous vehicles. The Road to Autonomy Index is the world's first and only pure-play index designed to measure the performance of the autonomous vehicle ecosystem and companies that have identified autonomy as a key component of their growth strategies. For the week of June 5th, the Road to Autonomy Index returned 1.42%. The S&P 500 returned 0.37%. The NASDAQ 100 returned negative 0.15%. The Road to Autonomy Index outperformed the S&P 500 by 1.05%. Furthermore, the Road to Autonomy Index outperformed the NASDAQ 100 by 1.57%. The top performing stocks in the Road to Autonomy this week were Tesla, which returned an outstanding 14.17%, mostly driven by the announcement that GM's going to use the charging network. For the second week in a row, Tesla was the best performing stock in the Road to Autonomy Index. GM had a great week because the charging returned 5.70%. Daimler Truck returned 4.61%. While these stocks perform well, they are just 3 of the 38 publicly traded companies that are components of the Road to Autonomy Index. News and opinion drives the market, and this week in autonomy was all about Tesla and the North American Charging Standard Connector. Elon, he's at it once again. Once again, he's being proven right. When Tesla first announced their proprietary EV charging network on September 24, 2012, there was a lot of skepticism in terms of return on investment. Is this going to work? Is this not going to work? When announcing the first 6 superchargers in that deal, Mr. Elon Musk stated the following: Tesla's supercharger network is a game changer for electric vehicles, providing long-distance travel that is a level of convenience equivalent to that of gasoline cars for all practical purposes. End quote. Boy, oh boy, Musk was right. He was correct. And he's going to be correct again when Tesla figures out full self-driving, also commonly known as FSD. What Mr. Musk and the team at Tesla fundamentally understand is economics. They understand economics. In Q1 2023, Tesla's gross profit margin was 19.3%. This is high compared to the notoriously small margins for global OEMs. And with Ford and GM switching to Tesla's North American charging standard, Piper Sandler is estimating that Tesla stands to generate an additional $3 billion in revenue by 2030, an additional $5.4 billion by 2032. It's working. By opening their charging network to non-Tesla owners, they're generating revenue. Tesla built it. They saw it. The same thing is going to happen when Tesla introduces a personally owned autonomous vehicle with no steering wheel, which will come at some point in the future because Tesla saw it and they're going to build it once again. Tesla will once again dominate the market because they understand cost management, economics, and platforms that generate revenue. Tesla is a revenue-generating platform at the end of the day. An autonomous vehicle operating with a camera and radar only is a highly scalable solution when compared to full-stack autonomous vehicles with LiDARs. While GM is taking a different approach to autonomy than Tesla with Cruise, in our opinion, both companies stand to be winners at the end of the day. During a talk at a Sanford Bernstein conference on June 2nd, 2023, Ms. Mary Barra, Chair and CEO of GM, stated the following: giant growth opportunity, end quote, for GM's Cruise Autonomous Vehicle Unit. Ms. Barr is correct. Furthermore, Ms. Barr is standing by her prediction that the market for personally owned autonomous vehicles is coming sooner rather than later, before the end of the decade. It's not far away. While we're uncertain about the timeline, we agree with Ms. Barr that personally owned autonomous vehicles are coming. In our opinion, the market for personally owned autonomous vehicles will be larger than that of the robotaxi market. That's right, it will be a larger market. Adding financial context to that statement, Ms. Barr is forecasting that Cruise could generate $50 billion a year in annual revenue by 2030. It's a big chunk of revenue. A way to go, GM, if you pull it off. In our opinion, a majority of that revenue will come from licensing the Cruise technology to GM for use in personally owned autonomous vehicles. As we are seeing here, the personally owned autonomous vehicle and robotaxi markets, they're going to be separate markets that complement each other. They're going to create tremendous value for companies that take a dual-track strategy approach to autonomy. At this time, we see this dual-track approach to autonomy being dominated by Tesla and GM. But this will change as autonomous driving technology and partnerships evolve. The one partnership that we're really watching closely is the Waymo JLR Partnership, first announced in 2018, in which Waymo agreed to buy up to 20,000 all-electric Jaguar I-Paces. Something's there. Waymo could very well hit this milestone as they retire their famous Chrysler Pacifica minivans, as the fleet has transitioned to an all-electric fleet complete with the Jaguar I-Paces. This long-term strategic partnership between JLR and Waymo could potentially pave the way for JLR to license the Waymo driver for personally owned autonomous Range Rovers. I believe it's coming. Let's see if it comes. While this is not a reality yet, this could become a reality in the future. Starting in 2025, all JLR vehicles, including the Range Rover, will come with NVIDIA's Drive platform to enable autonomous driving features. JLR is taking a step there. While this is not the Waymo driver, it's a big step forward towards a personally owned future with autonomous Range Rovers, personally owned. What we will see is the sector will be driven by luxury OEMs, including Porsche, Mercedes-Benz being two of the beneficiaries of the emerging market for personally owned autonomous vehicles, as these companies are fully committed to exploring this market and profiting from it. It will not just be the luxury OEMs that benefit from this market. Traditional luxury companies such as LVMH will benefit from this market as well. At some point in the future, we are predicting, very loudly and boldly, that LVMH will introduce a Louis Vuitton autonomous vehicle service. That's right, a Louis Vuitton autonomous vehicle service. It's coming at some point, we believe. Since 1987, LVMH has deployed a captive, vertically integrated, innovative business model that's defined culture. It's ushered in global trends anchored by their 75 prestigious brands. It's this business model that will enable LVMH to inaugurate a Louis Vuitton autonomous vehicle service in select markets around the world. With 79 billion euro in 2022 revenues and a gross profit margin of 68.4%, LVMH has the financial wherewithal to propose ambitious projects to further broaden the group's brands into popular culture. LVMH, after all, they have a rich history of doing just that. After the group's acquisition of Tiffany & Company for $5.8 billion in January 2021, LVMH expanded the Tiffany brand into NFTs with the introduction of 250 custom jewel-encrusted pendants for holders of the CryptoPunks NFTs at a price tag of $50,000 a piece. $50,000 a piece. Oh, and by the way, they sold out. They followed that up with the collaboration with Nike for the Nike Tiffany Air Force One 1837 shoes. Oh, by the way, those sold out. They're profitable too. These are collaborations that connect with culture. These are the collaborations that are going to usher in the personally owned autonomous vehicle market. The personally owned autonomous vehicle market will be one that is built on partnerships. But who stands to benefit? At this time, in our opinion, it's GM, Tesla, Porsche, Mercedes-Benz, and traditional luxury companies. In the future, this will change, but at the end of the day, a personally owned autonomous vehicle will be a luxury product when it's first introduced to the market. That's right, a luxury product. It will not be a mass market product. It's going to be expensive. It's going to be highly profitable. It's going to benefit shareholders. There's going to be recurring revenue streams in there. Perhaps augmented reality glass in there. We saw what Apple's doing. It's coming to the car. What are your thoughts on the emerging market of personally owned autonomous vehicles? Let us know by leaving a comment below or sending an email to hello@roadtoautonomy.com. That's hello@roadtoautonomy.com. We'd love to hear from you. As the autonomous vehicle ecosystem matures, the Road to Autonomy Index will evolve. But at no time can the index have more than 45 component companies. For a company to be considered for the index, they must be publicly traded on a recognized exchange for 365 days. They also must have a market capitalization of US $2 billion for 90 days prior to the 1-year anniversary of their debut as a public company. In addition to having a 90-day daily average volume of $500,000 or greater. Autonomy is a business, and there's an index to track its performance. The autonomy economy is coming. The autonomy economy is coming. Be sure to follow the Road to Autonomy Index, ticker Autonomy, on your favorite finance app. Again, the ticker is AUTONOMY, Autonomy. Be sure to join us again next Sunday for the latest installment of the Road to Autonomy's This Week in the Index. The future is bright, the future is autonomous, and the future is personally owned autonomous vehicles.